Well, hey there, everyone. Welcome to Chart This with Dave Keller. Happy Thursday, May 29th. I am your host, Dave Keller, coming to you from kind of rainy Redmond, Washington. Good to be back with you. We had highs in the low 80s yesterday. Today, we're back to sort of a normal climate for this time of year, but hope you guys are all doing well, enjoying the market volatility as much as I am here on Thursday, May 29th. Sort of a fascinating day. I mean, just in the last 12 hours, we've had so many different headlines to contend with. You had NVIDIA basically beating earnings as we were doing our show yesterday with a decisive, earnings release. You have the news overnight about, tariffs being taken off the table by the judicial system earlier than just recently. A pause on that pause. So I guess we're back on. We had Costco earnings after the bell, a little of everything going on today. And I had a great discussion earlier today with Tom Bowley. He'll be my latest guest on the Market Misbehavior podcast. We should have that interview out for you tomorrow morning. Really great discussion. I felt like it was a perfect time to bring Tom on the show and just talk about how you navigate through periods of market uncertainty and instability and all the headline risk. We talked about the benefits of technical analysis in this type of environment. Lots of other good things. So enjoy that as soon as it's out and available. Today we're going to look at this choppy market. Again, kind of a range-bound, choppy, sloppy, sideways day. Last hour was pretty decent, making the S&P and the Nasdaq finish firmly in the green. You'll see some individual stocks on the move. We're going to focus our chart review portion a little more on the individual stock level, focus on some of the names on the move, and I think that you should be aware of. With that in mind, let's get to the market recap portion of the show. S&P finishing higher, 0.4%. That puts us at 59.12 and change after today's session. The Nasdaq Composite, about the same percentage gain, 0.4%. Small caps about the same, mid caps slightly less. All the major indexes slightly higher, less than 0.5% to the upside. The VIX moved back down slightly lower, around 1920, we'll call it. So still below 20. That's our threshold for kind of a higher volatility environment when you need to start getting a little more defensively minded in terms of the possibility of further pullback. For now, we're sort of remaining with a VIX in the high teens, which tells you not too much to worry about just yet. I mean, if you look at the session, here's where we opened. And again, it certainly felt like between NVIDIA's, news after the close yesterday with tariffs being paused, certainly felt like it was going to be a raging up day. We had a higher gap up at the open, and then we just sort of rolled over. And by lunchtime, we're back down, actually at a net negative for the day. News coming in then through the course of the day that tariff announcement basically unwound by an appeals court. Again, if you like uncertainty, you got to love 2025 because even the headlines are competing within one trading session. We're getting, it's hard to tell whether we should be excited or not. Overall, as I discussed with Tom, I think this is one of those times when you focus on trend, when you focus on key levels, because as people get nervous, as they get optimistic, pessimistic, as they take some sort of headline as a really good thing or really bad thing, if it's an initial positive reaction and then you realize it ended up not being nearly as positive, I think price is the best arbiter of investor sentiment. That's what's going to tell you what's what. All right, let's continue to go higher through the different asset classes. Looking at the fixed income markets, bonds generally moving higher today. The TLT was up about 1%. 10-year yields, long bond yields, all drifting lower. So the 10-year point's around 443, we'll call it. The long bond yield around 492. 5-year point just below 4%. So we've been, since midday yesterday, we've seen rates come down as bond prices have started to rally. Not particularly a great sign, I would say, that investors are kind of rotating into a fairly defensive area of the market like bonds. But that's what we're seeing here. It's interesting what you have to remember is I had some questions this morning for my premium members about intermarket analysis, thinking about interest rates and what they represent. And to be honest with you, the message from things like the bond markets, it can be different, right? There's sometimes when higher rates are kind of a good thing depending on where we're at in the cycle. There's sometimes where it tends to be not as good of a thing. Generally speaking, when rates are going higher, particularly further out, that represents economic optimism. That basically means you're pricing in gains down the road as the economy grows. That means you're probably selling things like bonds to take on additional risk. And so lower rates mean bonds are being sold off, which means people are kind of optimistic. But it also means as this week progresses, if bonds start to rally, probably not a great sign, because the stock market has, arguably still in kind of that power on stall formation as we alluded to yesterday. As stocks have sort of stabilized here, do you see bonds start to rally, representing what I think that would represent is that investors are kind of going a little more risk off. We'll see that. We're not really seeing that kind of risk off move in other areas, particularly in the equity space, right? If there are things to really be worried about right now, I would expect defensive sectors like utilities, consumer staples, REITs to be doing a lot better than they are. They're really not doing particularly well on a relative basis. Now, today, you're going to see some of those sectors at the top of the leaderboard. So you're seeing bonds rally and some defensive sectors at the top, kind of bond proxies in the equity space. Still an early theme, maybe, but something I would certainly be keeping an eye on. I skipped the dollar completely, down about 0.5% using the UUP. All right, looking at the commodity space, gold and silver were up. So again, today ended up being kind of a risk on off kind of day, with gold and silver rallying. That's sort of a safe haven trade, with defensive sectors at the top, with bonds up. And again, even though the headlines from NVIDIA were quite positive, even though it looked like tariffs were going to be taken off the table, all of which should be pretty bullish for stocks, market did not rally very well at all. That's not a great sign that markets are not rallying more, given some of the headlines that we saw. But we'll see. Looking at the elsewhere in the commodity space, crude oil prices lower, natural gas prices lower. So the energy components within the commodity space moving to the downside. Cryptocurrencies also going kind of a risk-off move here today, right? So Bitcoin down to just above 106,000. We were almost to 109,000 earlier today. Yesterday, as we were doing the show, we had just come off of, testing all-time highs, just over 110,000. So you're seeing Bitcoin come down a bit. That's not a ton, but certainly heading in the wrong direction here. If you're all bulled up on cryptos, all 10 of the top coins were in the red today. Bitcoin and Ethereum both down about 1.4%. Looking at the 11 S&P sectors, defense at the top of the list today. REITs, real estate number one, up 0.9%. Energy number two, up 0.8%. Utilities and healthcare basically tied for third place, both up 0.7%. So three of those four are more defensive sectors for sure. Energy is more of a cyclical sector. On the downside, communication services, the only sector that was down today. So most of the S&P sectors were up. It was just the types of names that were up that is more concerning by my read. Communication services down 0.8%. Consumer discretionary was flat. Industrial slightly higher as well. It's so interesting along those lines. We shared the chart yesterday showing the three top sectors in the last month, and it's those three: technology, industrials, consumer discretionary. Up, technology, industrials, both up about 10, 11% for the last 1 month. Consumer discretionary, a little less than that, 8-point-something%. So some of the names that have been leading, certainly off of the April lows, taking a backseat. So this is one day. I would hesitate to draw some broad conclusions after what's happening in one session. But if we start to see this as more of a recurring pattern, with defense over offense, with FANG sectors at the bottom, with some of these sectors that have been leading so well off of the April low starting to change and be substituted by others at the top of the leaderboard, that could be something to think about. All right, looking at the breadth data, not bad today, right? The S&P 71% up, 28% down. That's decent numbers. Those are bullish. Those are bull market numbers right there. The New York Stock Exchange, more of a broader list. 2-to-1 ratio, stocks up versus down, 67% higher, 30% down. So the NASDAQ composite was a little more balanced, but overall, the breadth, as you can see shaded in green here on stock charts, pretty decent. So again, stocks generally were up today. It just was the more defensive stuff. I mean, given what we heard from NVIDIA, the fact that it's not up more Doesn't feel like a great sign to me. But who knows, right? We'll continue to monitor that. Looking at the Magnificent Seven and Friends, we can see Nvidia, the best performer of this basket of stocks, up over 3% today. So to be clear, not a bad day. We'll look at the chart though. We opened higher and actually traded lower. I think that's the more concerning aspect to today's session more than anything. Broadcom, which has moved pretty closely with Nvidia recently, up as well, up 1.1%. On the bottom, three of these names were down. Netflix, which has been, I think, undoubtedly the best chart of this basket in 2025, down 2%. Alphabet and Apple both down about 0.25% today. It's not a bad day. More of a ended up being more of a sideways day. Semiconductors really getting it done. You can see the semiconductor ETF, the SMH, had a great day. Nvidia obviously strong after earnings. Biotech, pretty interesting as we get to the market carpet. You'll see some biotech featured on there. That's not been a common appearance. I do see some questions coming in during the live stream, and I appreciate you guys. Those of you that are tuning in live, you can put comments anywhere you're watching the live stream, anywhere you can comment on Facebook, LinkedIn, YouTube, or X. Your comments are welcome, and certainly your questions for sure. We'll take a question or two at the end of the episode. We are planning an all mailbag episode tomorrow on Friday, May 30th, the last day of May. And we'd love to feature one of your questions on the air. So if we don't get to your question today, we'll get to some questions on the show tomorrow. Those all mailbag episodes have been a lot of fun. Gives me some time to more thoughtfully respond to some of the great questions that we're getting. And please keep them coming. It's a lot of fun to hear from you guys. All right, the heat map, we'll start big picture. I mean, kind of a neutral day, right? I mean, you've got NVIDIA as a positive outlier, but note that none of the other, sort of big growth names are up anywhere near. So this was what has happened. And I think this is what concerns me right now, right? If everything's bullish and if the markets are just in good shape and we're in kind of like a 2021 bull phase or a 2024 bull phase, NVIDIA blowing out earnings should be up a lot. And like the rest of the growth space is probably being pushed up as well. Certainly the rest of the semiconductor space should be lighting it up to the upside because we're all optimistic. I don't think we necessarily got that, right? AMD was basically up 0.2%, 0.2%. KLAC was down today. Intel, which is usually kind of a different name in the semiconductor space, but also not up. You've got Applied Materials down 1.3%. So this all market was telling you this was an NVIDIA thing and not a wow, semiconductors are awesome thing. Certainly not a technology is a great place to be because the sector was actually one of the worst performing sectors today. So boy, when I saw the news as we were doing the show yesterday of NVIDIA having strong earnings, I'm thinking, wow, this has the potential to really push the markets higher tomorrow. No, we're getting sort of a languishing here. Again, continuing that stall analogy is sort of what it feels like. Sort of like the upside momentum has changed. And that's what Tom and I talked about earlier today, which hopefully you'll enjoy that tomorrow morning, that interview. But, certainly you've seen a change in the chart of the S&P from April, kind of mid-May, accelerating off of that low to the last week or two, which has really been more of a sideways. It's like the market is telling you, we've priced in all the optimism, and now we're just kind of waiting. And again, we'll see which way this resolves from here. I'm assuming that the trend is up until we break support, and I think we start breaking support. I think things can accelerate to the downside very quickly. Now, elsewhere in the technology sectors, we're thinking about the heat map here. Salesforce, which was the other big earnings release yesterday, not good. Now, it actually traded a lot lower today. It actually traded higher through the course of the day, still closed over 3% lower than yesterday's close, but it was looking earlier in the day like it was going to be even more of a bath below, like less than 5% or more than 5% off of yesterday's close. CrowdStrike coming off of the new 52-week high yesterday, pulling back over 2%. Arista Networks, which has been pushing higher toward 100, failing and sort of rolling over. So I'm concerned about some of these technology names. Uber is another one, right? Coming off of the new 52-week high earlier this month, now rolling over. It's not a horrible chart, right? The chart of Uber is not a bad chart, but it's not a great chart, right? It's gone from like great to good. It's gone from obviously strong to pretty strong. And that's kind of how the spectrum shifts, right? When you have a market that is, from a bullish phase to a bearish phase, as that starts to happen, then it really happens a lot. and you get some okay charts that become ugly charts, and you get some good charts that become okay charts, and the great charts start to pull an Uber and pull back a little bit off of their all-time high. So that's what I'm on the warning signs for here. Looking elsewhere, I mean, not a lot, to be honest with you, sort of pockets of underperformance within communication services. I'm looking at charts like EA breaking a key trend line support. I grabbed that chart to look at earlier. Axon, which is one of the big defense companies, they're the ones that make tasers, I believe, right? Axon down about 3%. Again, not bad. We're just kind of pulling back from the high. So this could be just natural pullbacks off of new highs, which is pretty normal. But you look to see if the trend really starts to evolve. I think one of the biggest shifts I'm seeing today is if you covered up the name of the sector, and I showed you like real estate or healthcare or financials or like industrials, I don't know if you'd be able to tell them apart. I mean, they're generally looking very similar right about now. So a very homogeneous kind of look. And the fact that the defensive sectors look this good is kind of the concern for me. We'll see what happens if we continue in that vein. And then the other thing I would say, one last point would be within healthcare, pretty decent day healthcare wise. You can see some of the biotech names like Amgen, like Gilead, like Regeneron. Now, some of those have not been particularly strong charts, but starting to pop higher a little bit. I mean, Biogen for me is still not the kind of chart I get really excited about. But if you're more of a value-oriented investor, kind of buying undervalued, underperforming names, Biogen's really starting to rotate higher off of that 52-week low at the beginning of April. Something to keep in mind. All right, let's continue on. Look at some charts together. I'll take a question or two. We'll call it an evening. Here's the chart of the S&P 500. Yesterday, we highlighted sort of we called it a dark cloud cover candle, which I stand by today. Again, kind of telling, right? We opened up here. We actually opened right at yesterday's high. We traded down below yesterday's low. We ended up closing kind of mid-range. So after Tuesday, right? So this was Friday going into the Memorial Day weekend. We test the 200-day moving average for the first time since this gap. Tuesday opens a lot higher, and this is after the news flow over the weekend on tariffs with the EU being paused. Market rallies yesterday, today, you're seeing selling through the course of the day. So again, sort of reaffirming this stalled out environment. We're not going down, right? If we were going down, we'd be breaking gap support. We'd be breaking the 200-day. And again, I would confirm to you, I think that would be a really dangerous chart very, very quickly if we start to fail to hold that. And once investors realize that level is not a floor, but it's a temporary low, I think that's where things can accelerate to the downside very, very quickly. I think that would be a danger sign because there are many that are using that as sort of an obvious level of support. And in this week, or really in the last week, we've confirmed that with Friday's low right down into that gap range before we popped higher on Tuesday. So really, I mean, we're not breaking down yet, but certainly the pace of this move, which was undeniably unsustainable, right? In terms of the acceleration, I mean, the pace of that move means the S&P's up like 20, 30% this year, which seems kind of outlandish to me. Theoretically possible, but very, very unlikely. So it certainly seemed like we would have to have some sort of pullback. We haven't had enough of a breakout to say that, yes, the uptrend is resuming. Now I think we're sort of in a neutral positioning. The momentum is starting to come off a little bit, but still pretty strong here. The RSI is well above 50. So again, I don't think this chart is broken yet. I just think the pace of the uptrend has certainly paused. Things you look for, besides the price breaking down, which is the obvious one, deterioration in breadth, which tells you there's a lot of downside moves that just aren't reflecting in the chart of the S&P or the NASDAQ, but are certainly real. And then the other thing would be leadership rotations, right? Looking at some of the defensive sectors starting to work, looking at some of the things that have been working like tech, industrials, consumer discretionary starting to rotate lower. It's what you saw a bit today, but I need to see more of that to declare a big red flag for this market. Again, kind of reinforcing the stoplight approach here. I would argue that anything above kind of that 5750, 5800 level is pretty much noise. And as long as we hold that on pullbacks, we're just kind of chopping around here and waiting. The market is in a is sitting on its hand. It's in wait and see mode to see how things resolve. And that makes sense given, I mean, just today we've had completely conflicting headlines that have implications for dramatic changes in the entire US foreign policy that's been developed through the course of this year, right? I mean, it's been pretty. When you think about all the headlines we've been processing here, it's a lot. And again, so I mean, the potential paths from here, if tariffs are, declared unconstitutional and they just don't happen anymore, the market takes that as a huge upswing, right? I mean, it's hard to imagine the market not rallying significantly if that's confirmed, but it's not. And it won't be confirmed for a while because there's a lot of legal debates that can happen between now and when you get any sort of sense of that. And if there's one thing we've seen, we have a very creative administration here in the US, arguably, that is going to find many different ways to make something happen if they really want to, really are committed to doing so. So we'll see. I think that just nets out to a market that has a lack of clarity about what's next. And at some point that starts to weigh on things, right? I mean, I think the longer that continues, I think that's the problem. Closure would help the market at least resolve in some direction. We're not getting closure today. Just wanted to note, by the way, the dollar had an interesting move today. Actually opened higher and then closed down toward the lows of the day. So a bit of an intraday shift from an initial higher open down to a lower close. I think the dollar is an important chart to watch here because we have certainly seen the phenomenon in 2025 where non-US markets have dramatically outperformed US markets, looking at the equity space, right? So, EFA has done much better than the US year to date. EFA up a decent amount year to date, the S&P and the NASDAQ lower. So overall, that's pretty, that has been the story here in 2025. Now, if that starts to shift, and if you see the dominance of non-US markets maybe shift back a little bit to the US, I would imagine the dollar strengthens in that environment as non-US investors maybe rotate back to US markets and convert back to dollars. And you kind of saw that out of the open. It felt like, okay, higher stocks, stronger dollar. This might be the next big surge. But again, through the course of the day today, the opposite. We see the dollar actually closing lower. So certainly a theme we'll continue to monitor, probably going into next week. Crude oil, again, kind of chopping around here. Could be a double bottom pattern, but we haven't had the confirmation of breaking above resistance to confirm that is in there. Looking at gold, I mean, nice rally from yesterday. And again, rally in this case, a rally in gold, a strong rally in gold, I would not guess would coincide with a strong rally in stocks, right? This is probably more of a safe haven trade, and a rally higher would be probably a bad sign for stocks. All right, let's talk about some individual equities and their charts. Here's the chart of NVIDIA. As I mentioned earlier, we gapped higher on earnings. We closed lower. So again, still up from yesterday's close. We closed over 3% higher. That does clear resistance. We talked about this sort of resistance range we're resolving to the upside. I would love to feel better about that incredible earnings beat if the market went higher. But what this basically suggests is that a bunch of people were thrilled with NVIDIA's results and then sold out of their positions. Because if you had a bunch of people trying to buy NVIDIA today, price would have accelerated to the upside a lot more than we saw. So I would say looking at this trend line remains kind of my general sense. I think the chart of NVIDIA is in decent shape until we break below that trend line support. Also keep an eye on the 200-day moving average, all kind of coalescing around that same kind of level, depending on how quickly we would sell off. You kind of have both of those, what we call a confluence of support, very much right there. Salesforce.com, kind of the opposite, right? Gapping lower at the open, but closing higher. This, do you remember the name of the candle? It is a hammer candle. We briefed you on those last week on the show with some crudely drawn illustrations of major candle patterns. Hammer candle's bullish, all right? And we open here post earnings. We gap down on earnings. We traded all the way down to around 255, but by the close, we're back above 265 and back above the open. So that's a hammer candle. It's bullish. Think of it as hammering out a bottom. Usually suggests the next 1 to 3 bars are positive. So that's an encouraging reaction. I mean, the earnings were not good. We gapped down at the open, but buyers are coming in and buying Salesforce during the session. Again, as we talked about yesterday, I still see that as a potential inverted head and shoulders bottom, but This day, I mean, this gap lower really changes the look of that pattern. Really doesn't look as much like a classic inverted head and shoulders bottom. However, I would still be looking for a break above the 200-day to validate an uptrend. Watch the momentum, by the way. The RSI is right at 40, which is usually where things stop, if that is still a bullish chart here. Celsius making caffeine-packed and sugar-packed drinks for all of our enjoyment. I actually have not. I actually did try a Celsius once. I had a sip and I couldn't do it. I couldn't keep going. I'm pretty sensitive to caffeine, and I already drink coffee every day, so I was afraid what it would do to my system. But not a fan. But there are certainly plenty of fans out there. Having said that, not as much of a fan of the chart, and I'll tell you why. It's flashing a bearish momentum divergence. We're seeing some of these on charts that have rallied aggressively off of their low. Celsius actually bottomed out back in February, not in April. And you can see the move higher highs in April and May, lower peaks and momentum. So that's continuing that bearish momentum divergence that really started back in late March. Suggests that this most recent upswing is a little questionable in terms of the momentum support. Suggests we might be near an exhaustion point on that rally. Speaking of charts breaking down, Electronic Arts, EA, video game maker, breaking down today, down about just under 3%. What concerns me here, today's move takes us below the 200-day moving average, also takes us below a trend line using the January and April lows. That's not a good look for this chart. Again, charts like this I think of as innocent until proven guilty. So what does it mean to be proven guilty? Two things I would list off: draw a trend line off of the lows and we break the trend line. Watch the 200-day moving average. Are we unable to hold that? Both of those things just happened today. We'll see if we get follow through tomorrow. And again, similar to the previous chart, watch the RSI right at 40, which is pretty much as low as you want it to get, and still assume that that's a constructive chart. So what charts are improving? If charts like those last two are struggling, biotech is one area actually showing some renewed strength this week. Here's the chart of GILD. You can see it's making a new, we'll call it a 2-month high today. We're breaking above the sort of mid-April into early mid-May peaks. We can see a breakout above the 50-day continuing to push higher. I like that upside rotation. I like the RSI getting just above 60 today. That certainly feels like a stock that bounced off the 38.2% retracement level and then rotated higher, now resuming that uptrend phase. A couple of ETFs you can follow to track biotech. IBB is one. The other one, XBI. Thank you, Bull Bear Jeff, for popping that. It read my mind. XBI, a couple biotech ETFs to keep an eye on. I mean, with something like Gilead, it's like the way that I think of it, just to get ahead of a question I often get, why do you buy or trade Gilead versus like the IBB or one of the biotech ETFs? For me, it ends up being about conviction in the chart, conviction on the theme. If you get a sense that this is just a thematic play, I think semiconductors or home builders or biotech is the story. And I don't have real, like home builders as an example, I think, which I don't at the moment, but theoretical example. I think home builders are a great place to be, but I don't really have a strong thesis on NVR versus Toll Brothers versus Lennar. Buy the ETF, you get exposure to all of them. And by diversifying, you're kind of, evening out your bets across a broader space and you're playing on the theme working. But if the chart of Gilead looks very different than the other biotech names and you think Biogen is still an ugly chart, but I think this is a really good chart, I think that's it. From a fundamental perspective, if you have more of a conviction because of some structural reality of the company, that for me tells me, okay, it's not an ETF trade I'm making. I'm trading this individual name because I think there's a story there that I want to benefit from. That's how I would generally think of the stock versus ETF debate. It's really more what's driving that, what's motivating that trade at any given moment. Warner Brothers Discovery is another one to look at as well. WBD this week breaking back above the 200-day moving average. It gapped below it in early April, going into that April low, made higher lows in early May, and then again last week. This week opens. We have 3 straight pretty decent days. Today did close a little bit off of the open, but still 3 straight days with positive close-to-close move. Pretty encouraging, and I would say as long as that holds and we hold the 200-day on any chop, I could see that continuing higher. I like the improving momentum and the fact that we're making higher highs and higher lows. That's a good chart until we break support. Oh, funnel chart, I forgot. Costco, we've got earnings here after the close. Costco is one of those charts that I have found, depending on whether you're bullish or bearish, you will see certain patterns. When I look at this chart, I immediately am drawn to higher high, higher high, higher high, higher high, higher high, lower high in May, right? A couple of weeks ago, right? So all of a sudden, this looks like a potential topping pattern, what we call a head and shoulders pattern, which really isn't a confirmed head and shoulders until you would break below that support line, that neckline way down there. But I would say, the general trend has been pretty good, right? And this actually made a low in mid-March. The April low is basically retesting that. And then we got back above the 200-day, and then we've continued. We're above both the moving averages. So I would say generally that trend is pretty decent. You really can't call it a head and shoulders top until we would get all the way down to like 870, 850 and break below that point. Did want to check very quickly here and look at Costco because they reported after the close. So we can see what's happening here. Boy, dead flat it looks like. Literally right where we were. We'll see. Maybe there's more news to come out, but for now, the market taking that as a not a big move the needle kind of announcement. Let's look at here today. We'll put the extended hours here. So choppy, right? So it traded all the way up here at around 1025, 1026, but now back. It's not a lot of trading here in the last hour, but at least from the source that's used on stock charts. But it looks like an initial upside reaction followed by a move right back down, and we are right at the close yesterday. So overall, not a lot of upside follow through for Costco. All right, that's it for the charts. Let me take a question or two. Excuse me, and then we'll call it an evening. Let's see. 3P Investor, thanks as always for watching, my friend. You said, Dave, how best can one use the stock charts platform scan workbench with its built-in pre-scan criteria in current high volatility environment? Would you use point and figure double top plus new 3 months high? Good question. So a couple different things that I would say about that. So there are certain types of scans that I kind of run all the time. And the two that I run most often, and I'll show you on stock charts, are stocks making new 3 month highs, what I call new swing highs. So this is new 13-week or 65-day or 3 month highs, depending on what data I'm looking at. I started doing that a long time ago, and I found that was just a great regular scan to run. As you can see, I actually schedule this to run every day at 4:14 Eastern. So 15 minutes after the close, it runs a scan for stocks that made new 3 month highs and new 3 month lows. I don't look at that list every day, but I do often, at least once a week, to just see what am I, I want to make sure that I know what's moving and what's able to break out and what's able to, what is not breaking out. So in any environment, I think stocks making new 3 month highs, particularly in this environment, is so crucial because if you think about it, the S&Ps kind of, rallied off the April lows, consolidated a bit. And the real question is, do we resume the uptrend, right? Like Costco or NVIDIA today, gapping out and breaking out of that stall range that we've been in. And I want to look for stocks that are able to do that, right? Because not all stocks appear to be doing that right now. So this scan is a great way of identifying that new 3 month highs. Another one is what I call moving averages proper order, which means the 21-day above the 50-day, the 50-day above the 100-day, the 100-day above the 200-day. So we have, the 4 moving averages in a proper order, which means we're in an uptrend. Those are the charts that are just good charts. Those are the up and to the right long-term, structural winners. These are charts like a Kroger has been on that list for a long time. It might not be on it today, actually, given the fact we made a bit of a lower high and have rotated lower this week. But for the longest time, it's been on that scan every week. And it's just sort of moving averages are all kind of going the way you want them to go. And so making sure I know which names those are and understanding them is pretty helpful. So those are two. Now, in terms of you had asked about like the predefined scans, which is actually a really cool feature. So 2 things you can do. I would actually point you to the sample scan library. I think this is actually a really good list of charts to start to focus on. And I will tell you what makes sense to me right now is focusing on relative highs, right? So what's happening right now is a lot of things have had really good moves off of the April low and are now we're sort of in this question mark what happens next. There's going to be a group of stocks and the sectors that have done so well, technology, industrials, consumer discretionary. I think what sets them apart with one of the charts we showed yesterday is the relative strength has been so strong. So looking for individual stocks, looking for ETFs where the relative performance is making a new 6-month high, for example, those are going to be good areas of the market to look at, and particularly running that screen to look for defensive sectors starting to pop on there. That list has been populated by things like technology, by things like industrials, like defense names, right? Like a Raytheon would be up on that screen for last month or two. Do the results of that screen start to change, and you start to see more defensive, more low volatility names popping up there? That, I would argue, maybe the most important scan to be looking at. Would be my suggestion. Those are the three that I would think about. Someone asked, can those scans be emailed? Yeah. So if you know stock charts, and if you don't, I'm really sorry. But once you create a scan, so like this is the scan, one of the scans that I run for stocks making new 13-week highs, you can go to scheduled scans, pick the scan off of the list, say when you want it to run, and decide what days you want to do it. So I have some weekly scans that I run, and they run Friday after the close. So every Friday I get an email, and then here you just want to make sure you have send email with scan results. It's actually really cool because it sends you an email. So every Friday after the close, I go do something else, and then I can come back and look at what's happened during the week. And I run some scans and other things, chart list reports that all give you kind of a weekly update. Pretty cool feature. Apparently they should tell more people about it because I think it's really good, but I appreciate you asking about that for sure. Boy, we don't have any more time for any more questions, but I do see some really good ones. I'm going to put those in the mailbag. Please tune in tomorrow on Friday, May 30th. We will answer some of the remaining questions, some of the other ones we've received this week. In the meantime, have a fantastic evening. Thanks so much for watching live. Thanks for watching the replay. Thanks for making this a fun way to spend an afternoon. I hope you enjoy it as well. For Market Misbehavior, I'm Dave Keller. Have a good night. And remember, it's always a good time to own good charts. Take care, folks.